Good evening, Redbox family. I got some great news for you. I just saw a filing that, well, not a filing, but a news article stating that Redbox and CSSE are under investigation from a law firm. And if, in fact, they find something, that they can file suit due to the fact that this take under was not of service to or in the best interest of the shareholders, then this whole merger deal could get delayed or potentially even canceled. Guys, I've been saying this since I read the last filing and did YouTube videos on it. You can go and watch, but I want to go over the latest findings and why I think that Redbox is about to rip to new levels. Just a reminder that nothing I say is financial advice. Please do your own DD. Thank you so much for watching. If you haven't already, please like and subscribe. Now let's get into it. Okay, guys, this comes from Business Wire. Redbox investors alert by the former Attorney General of Louisiana, Con Swick and Fody, LLC, investigates adequacy of price and process in proposal sale of Redbox Entertainment, Inc., ticker RDBX. July 26, 2022. 1:16 p.m. Eastern Daylight Time. New Orleans. Former Attorney General of Louisiana, Charles C. Fonte Jr. Esquire, and the law firm of Con, Swick, and Fody, LLC, KSF, are investigating the proposed sale of Redbox Entertainment, Inc., NASDAQ, GM, RDBX, to Chicken Soup for the Soul Entertainment, NASDAQ ticker CSSE. Under the terms of the proposal transaction, shareholders of Redbox will receive 0.087 shares of CSSE for each share of Redbox that they own. KSF is seeking to determine whether this consideration and the process that led to it are adequate, or whether the consideration undervalues the company. If you believe that this transaction undervalues the company, and or if you would like to discuss your legal rights regarding the proposed sale, you may, without obligation or cost to you, email or call KSF Managing Partners Louis S. Kahn. And guys, his email is louis.kahn, K-A-H-N, at K as in Kilo, S as in Sierra, F as in Foxtrot, Counsel, which is C as in Charlie, O as in Oscar, U as in Uniform, N as in November, S as in Sierra, E as in Echo, L as in Lima.com. Toll free at any time at 855-768-1857. Again, that number is 855-768-1857. Or you can visit their website, https://www.ksfcounsel.com/cases /NASDAQ GM -RDBX / to learn more. To learn more about KSF, whose partners include the former Louisiana Attorney General, visit www.ksfcounsel.com. Con, Swick, and Fody, LLC, 1100 Poydras Suite, Suite 3200, New Orleans, Louisiana, 70163. And guys, again, the contact's name there is Louis S. Kahn if you would like to contact them. Now, guys, anybody who is invested in Redbox that has bought into this prior to this proposed merger agreement for the take under is able to call and let them know about your losses and that you feel it's a take under. So you have the contact information. You're welcome to do that. Now, let me show you where in the filing, in case you did not watch my previous video, this information is located. I suggest you all go back if you're seriously invested in Redbox and want to, figure out what's going on here. I did a whole video on the filing that is extremely important to this, guys. It goes to show you that you're not going to wake up overnight and your CSSE is going to, or that your Redbox is going to be converted to CSSE at, pennies, less than $1 per share. That is not going to happen. There are going to be filings. So as long as you're staying on top of it, you don't have to worry about that. And with this news, guys, I already knew this was happening because of what I saw in the filing. I encourage you to go back and look at all of it, but I want to show you the important fact right now. But there's a lot to it, so please go watch that video. I just don't want to completely repeat myself and make this longer than it needs to be because it is a lot of information. Okay, guys, so here we have the filing. This is what you find on page 32. It says litigation regarding or relating to the mergers could result in an injunction preventing the completion of the mergers and or substantial cost to CSSE and Redbox. Security class action lawsuits and derivative lawsuits are often brought against public companies that have entered into acquisitions, mergers, or other business combination agreements. An adverse judgment could result in monetary damages, which could have a negative impact on CSSE and Redbox respective liquidity and financial condition. Lawsuits that may be brought against CSSE, Redbox, or their respective directors could also seek, among other things, injunctive relief or other equitable relief, including a request to rescind parts of the merger agreement already implemented and to otherwise enjoin the parties from consummating the mergers. In May 2022, CSSE received a request for access to the books and records of CSSE relating to the terms of the merger agreement and the transactions contemplated thereby. Guys, right here we have it. This is how I knew that this was already happening, because they tell you right in this filing, and this is why it's important that you review these filings. As annoying as it is to go through hundreds of pages, they give you a lot of information. And this told me that a law firm had already inquired and was in the process of filing suit or investigating to file suit, which currently they're in the investigation process, right? But they're letting everybody know that they're being investigated. So the reason they would let everyone know, in my opinion, is because they know that they're going to be filing suit in this case. In which case, why would the shorts want to hold their shares at an extremely high cost to borrow? Right now, the cost to borrow rate is around 700% max, guys. That's insane for them to have to hold potentially for months. In a minute, I'm going to show you that they already have on the books potential delays set in stone for dates in case something like this were to occur. So not only did I know this from the filing, but clearly it's written out that they were aware, and that's why it's in the filing, right? Makes sense. Let me continue. One of the conditions to the closing of the mergers is that no injunction by any court or other tribunal or competent jurisdiction has been entered and continues to be in effect, and no law has been adopted or is effective in either case that prohibits or makes illegal the closing of the mergers. So guys, after they do their DD in order to file suit against Redbox or CSSE or both for this merger completion, they are going to, first thing in my opinion would be that they would ask the court to issue an injunction stating that they cannot close the merger deal prior to the trial. So that would be the delay that I've been talking about. Like I said, you do not have to worry about waking up and finding out that you own CSSE at 0.067 of a share or whatever the heck the figure is I just read. You know, we all know that this is not a play anymore on fundamentals. This is solely a play to squeeze the shorts, guys. And if you haven't figured out by now that when a stock trades 20 to 30 times its entire float in one day, which it did yesterday. I haven't looked at the numbers yet for today. I suspect they weren't quite as high as yesterday, but I think volume's going to come flooding back in tomorrow now that this has been revealed, because I don't think people saw it. I know I didn't notice it, guys, until after hours. So I'm sure that when word starts spreading, people will be buying Redbox up like wildfire, because why would shorts, knowing that there's a risk of months and months of delay, continue to hold these shares, especially when the price is now running in the upward direction? And there's several reasons I believe that this will continue to climb upwards. If you haven't already, watch the video I put out yesterday because I discussed some of them. I'm going to keep this to this in this video. Now listen, I want to show you that in the next page, what can happen. So hang on one sec. Okay, guys, this is actually page 11, so this was shown prior to page 32. Obviously, I'm going out of order, but it's because of what I'm trying to show you. Here we have the termination of the merger agreement. And it says, in addition, either CSSE or Redbox may terminate the merger agreement if the mergers have not been consummated on or before October 31st, 2022, which is the end date of the contract, right? Now, I'm going to actually read this whole paragraph because I think it's important for this. Provided that the right to terminate the merger agreement as described in this bullet shall not be available to any party whose failure to fulfill in any material respect any of the obligations under the merger agreement has been the proximate cause of or proximity resulted in the failure of the mergers to be consummated by the end date, and provided further that the end date may be extended further initially to January 31st, 2023. Guys, this is very, very important because they already know that they were likely to get sued because this deal was absolute BS to any shareholder. It was kind of like a slap in the face when you paid $10 a share and they thought that you should get under $1 a share if you bought this, you know, when it was a SPAC, let's say. Okay. Now, that's really insulting. If they thought originally this company was worth $10 a share because that's what they were IPOing it for, right? Through the SPAC merger deal. And then they're saying you're going to get 0.67 of a share of CSSE, guys. That is not acting in the best interest of shareholders, okay? I understand that this company has a lot of debt and that's not being argued. What's being argued is that when you make a merger agreement, it has to be fair to shareholders. And this 100% was not. And I don't think any judge is going to say that they acted in the best interest of their shareholders. So, I think at best at least it will delay it, which is why they have these dates written in here. And at best, it may cancel it altogether, guys, and give Redbox the opportunity to come back on their own, because I honestly think they have potential to be a good company. I just think they got screwed. And we're not talking about the Redbox that's, you know, in the grocery store to rent DVDs from. We're talking about their streaming service when I say that. So let me be perfectly clear. Now, the dates that they have to extend it, the first one being January 31st of 2023, and thereafter to April 30th, 2023, if certain conditions outside the control of the parties have not been satisfied. Okay, the certain conditions outside of the control would be the court ordering an injunction that they can't close the merger until they have a hearing. Okay, and that would be the first thing that the attorney is going to request from the judge, in my opinion. Okay, so that's why I'm not worried about this. Any court of competent jurisdiction or other government entity shall have issued any judgment, order, injunction, rule, or decree, or taken by any other action restraining, enjoining, or otherwise prohibiting any of the transactions contemplated by the merger agreement, and such judgment, order, injunction, rule, decree, or other action shall have become final and non-appealable, provided the parties seeking to terminate the merger agreement as described to this bullet shall have used its reasonable best efforts to contest, appeal, and remove such judgment. Now, guys, supposing that they do fight this out, this could be like years. Shorts are not going to want to hold and pay these insane cost borrows, or even for several more months, because why? There's other plays they can get in on, okay? They've made their money here, and now is the time for them to start thinking about closing those positions, in my opinion, before things really start adding up for them. So, at any rate, if they have to then make a reasonable effort to overturn a judgment, guys. And that's the only way to get out of this contract, okay? So, my point is that now we have it on record that a lawsuit is in the works because they're investigating to file one, right? So that should be enough, in my opinion, to tell shorts that the risk is getting too high. Because when you're making a trade, guys, you have to weigh risk versus reward. At these high cost to borrow rates, it's not worth the risk anymore. I truly believe that we are in the process of squeezing these shorts and that it's going to start happening this week. Thank you to this filing. Now, let me just show you the Rdbx data so you are aware of where we stand. Okay, guys, shout out to Greg Antone again for sharing this information on Twitter. His Rdbx data reveals that they are still on the threshold, guys, with a 5.1% increase in the short interest. They're currently at 90.71% short. Today, they borrowed 154.2 thousand shares and only returned 141.8 thousand shares. So that left an additional 12.4 thousand shares, creating the 5.1% increase. Keep in mind, Redbox has a tiny, tiny float. And again, it's somewhere between 5 and 10 million shares, guys, because there's different info everywhere. Last I knew, it was 3.94, plus in that filing, it showed an additional 1 million warrants that were cashed in by Seaport, which would make the float 4.94 million. There are other sites saying it's higher. At any rate, in my opinion, go back and watch yesterday's video where I clearly expressed to you that with the amount of trading that's being done in their infinite liquidity pool, there are allegedly more naked shorts in this play than you could possibly imagine. So I don't think it matters what the float is right now. I think shorts are up paddle without a creek. Okay. Now, it'll show you right here. Cost to borrow max is 927.66%. Cost to borrow average is 724.92% with a minimum of 395.46, guys. So as you can see, this is absolutely crazy. It's wicked expensive. It's getting higher and higher the more expensive we go, because yesterday the high was between, well, the average I think was around 400% and the high was about 700%. As you can see, as the price goes up, so does the cost to borrow, right? Now, we can take a look real quick at Fintel and see if there's even any shares left to borrow. Let's do that before we end this. Let's start with Market Chameleon, guys. So today we traded a total of 30 million shares, which was, probably about average for what we've been trading in general. However, it's far lower than yesterday, yet we still managed to get the price up. And guys, out of that 30 million shares, the total traded in the dark pool was 72%. We traded 72% in the dark pool. Price still went up. Guys, this is absolutely unacceptable. I can't stress enough that we need to ban this dark pool. We need to find a way as retail to come together and do that. Please listen to my video from yesterday because I discussed the plans that we are starting to put in works for protesting this. As you can see, a ridiculous amount was traded in the dark pool, yet we were still up. There was a total of 54,928 trades in total today, guys. Moving on to Fintel. Okay, guys, as you can see, Fintel's information is always different than other platforms. So according to Fintel, the short interest is at 63.65%. And oddly, the off-exchange short volume was 41,336,353 shares today, with an off-exchange volume ratio. Guys, this does not even make sense. It's like drastically different from what it was on the other one, 56.53%, and the other one says 72%. And the shares traded off exchange were much higher than the total volume today. So I'm confused unless they haven't updated their site and this is giving us yesterday's information. However, going back 726, there are no shares left to borrow, which is the important part that I want to take note of here. But guys, I also want you to see that these drastically different numbers, they shouldn't be so different. obviously there's something going on that we're not aware of that's really screwed up, okay? They are fudging numbers in ways that one site gets one number, another gets the other. This is the volume. How do they not all add up to equal the same thing, guys? That's a great question, isn't it? Wish I knew the answer. And guys, the cost to borrow, if there were shares available on Fintel, is showing 357.68. Again, there's no shares, so that's probably the last time they were lent out before the price skyrocketed. That would be my guess. And then I just quickly want to show you why I am so bullish on this week. Check out these failure to delivers, guys. This is why the price started moving up, in my honest opinion. They have T plus 35 days to cover these shares. So I'm hoping tomorrow we really start to squeeze, because it's my birthday, and that would be the best birthday present ever, because I've been in this place since October and I really want it to rock it. Anyways, little TMI, but that's what I'm thinking, that something big is about to come, guys. And as you can see, I pointed out this to you on yesterday as well, because T plus 35 brings us to somewhere around these millions of shares that are due, right? So in my opinion, things are looking good. I'm sure they're building up an enormous amount of FTDs, which they don't have the information yet for July because they're not due, or they're not able to lend out shares. I'm not sure, but I've been seeing this as a common trend. So quite interesting, but I just think they're not due yet, so they're not updated. However, guys, yeah, because as you can see, it ends on 6/30th here, so that would make sense. I really think that we have a lot of positive things in our direction. I think seeing that there's the potential lawsuit, I don't think the company would be advertising it if they didn't have the information that they needed, or weren't fairly confident they were going to get it, right? So let's just quickly look at the chart and then we'll end. Okay, guys, so this is the daily chart for the past year. And as you can see, it has made a run once, came back down, tried to make it again twice, a third time here, a fourth time, came back down, and a fifth time, right? So depending on which part of this cycle we're in, if we're in this type of rally, right, then it took 1, 2, 3, 4, 5, 6 days to get to here. If we're in this rally, it's something similar. Well, first, let me show you. And then it came down 1, 2, 3, 4, 5 days, I would say, and then it started running again, and it took another, I think, 6. 1, 2, 3, 4, 5, 6 days to get to the top, okay? So potentially what I'm thinking could happen is we're in day 2. We could have the next 4 days, you know, running. And again, look at in these 6 days, there are days where you see a little bit of red, so don't get scared if that happens. You know, nothing major, but it does. And then possibly a slight pullback, which is normal, guys, for a few days, 5 days, according to this cycle, and then another 6 days of a massive run. So this could potentially run for the next, you know, 6, 5, 6. So 17 days, we're in 2. So 15 more days of that cycle is what we could be looking at. Again, that's only if this repeats this pattern. There's no guarantees that that's what's going to happen. But, you know, if you're following the chart, something to look at. Now you can see, which is more important to me, that these moving averages are starting to curl up. Ultimately, I want to see this green line, which is my 13 SMA, cross above this blue line, the 20 SMA, which I think is going to happen over the next couple days. Then I want them both to curl up and pass above the 200 SMA, guys. And that would be a very bullish indicator. Now, interestingly enough, this 50, well, this is my 48, but essentially the 50 would fall around the same spot. It's still trading above the 200-day SMA, which is extremely bullish. We never dipped that 50 below the 200, guys. So ultimately, we want to see these curl up and pass, you know, the 50, pass above the 200 and the 50-day moving average. That's what I'm going to be looking for to know that we're on trend for continuation here. Guys, this chart is extremely bullish. I'm very excited about it. Let me just see. Here's my 4-hour chart. What I ultimately want to see here is for my green line, which is my 13 SMA, to cross above the purple, the 48 SMA, right? Because this is in the 4-hour chart, it would be very bullish to get above that first, which is ultimately what I think is going to happen. Either tomorrow or the following day. Again, those are in 4-hour increments, so depending on how we move up, guys. And then here we are currently trading, the 13 is currently trading above the 48 SMA in the after hours. And it's been doing that, guys, since this afternoon when I called out on Twitter that we were about to get the 1348 crossover. And as you can see, it consolidated for a while, so it took longer than I thought. But we did. We got that crossover. And I think I started saying watch for it somewhere down around here. It took a while to get up there, but it eventually crossed. We got this nice little run up. And then again, we keep making these like bull flaggish type patterns. So it's great, guys. I really like the way the chart's heading. In the after hours, we're trading at $6.31. So it's somewhere right around where we closed today. I think we got to a high of $6.35 or so. Anyways, I think that once news starts spreading about the fact that this lawsuit, or that they're investigating for a potential lawsuit, and people put the puzzle pieces together, I think you will see shorts start to cover. Okay, so I'm looking for that to start happening tomorrow, because I'm sure they're meeting after hours to discuss it on these hedge funds today. Thank you so much for watching. Please like and subscribe if you haven't already. I appreciate you, and have a great night.